What's up, traders? Anthony Crudele here, and welcome to 10-Minute Technicals. Q3 is in the books. We're on to Q4. What do the charts say looking at the indexes? Let's dive right into it. So we're going to start off with the E-mini S&P here. All the charts today are going to be daily charts. I've got 20-period, 3 standard deviation Bollinger Bands. I've got 8, 21, and 34 moving averages, simple moving averages. And then I have my beacon indicator, which takes the Bollinger Band peaks and it overlays support and resistance levels on there. The red's going to be 70%, 50% is the yellow, and blue is 30%. And so those are going to be my boxed out areas for support and resistance. If you read my morning note, my Deli's daily note, it's free. And I talk about how I'm looking at the indexes still with some divergence. And I like the ES and the YM. I'm going to explain more as to why I like them to be bullish. And it really comes down to my beacon indicator, which is free and open source here on GoCharting and TradingView as well. And when we're above this box and we're above these moving averages, it's just bull mode for me. And so when you look at the S&P, you've got Bollinger Bands opening up wider, and that means range expansion. And so when you have range expansion in Bollinger Bands and you're above moving averages and you're above my beacon box, which is that top resistance level, they're just sitting there and grinding above it. It's pretty much as bullish of a mode as I'm going to get. It does mean that we should probably take out the highs. And I think for now, what's really interesting is this morning, if you read my note, I talked about how below 57.53, I think brings sellers. I will believe that for, the foreseeable future, as long as this beacon level stays here. If it gets below there, I think it's going to be a total chop fest. But look at where today's low is and what it held. Today's low I thought was a really good low of 57, 56 and a quarter. And if we can just hold today's low, the last day of the month, last day of the quarter, into the next few sessions, I expect us to make a new high. And I think the move could be somewhat substantial. I got to tell you, I think that with the Bollinger Band way up there, this move could be a ripper higher. Now, the flip side is we take out this recent low, today's low, it just gets into a just total chop fest in here. And I just don't love the trade. I think it'll be very difficult. And right now, obviously, I favor higher, but today's low is key. That's the bottom line. Today's low is key. It held support I wanted it to. It's building off of it. End of the month, we saw a lot of buyers come in. We'll see what the first day of the month brings, first day of the quarter. It's going to be interesting nonetheless. So S&P, today's low, last day of the month low, 57, 56 and a quarter to 57, 53 is key. As long as it holds above that, I think we build higher, and I wouldn't fade that move. I'm going to go to the YM because the YM is interesting here because it's the strongest market of all the major indexes. Right now, it's stronger than Dow. I'm sorry, this is the Dow. It's stronger than the S&P. It's stronger than Nasdaq. It's far stronger than Russell. And so right now, this is the upside leader of the market. Well above the 8-day moving average. Didn't close positive today, but that doesn't really change anything. Didn't even come down to test the top of my boxed off area for my beacon indicator. And so for me on a daily basis, this market looks like it wants to hit the objective of 43,623, which is this Bollinger Band peak. But it just, because it's hugging so close to the top Bollinger Band, I expect it to be a really tight grind. I mentioned in the S&P that if the S&P starts to make a higher high over the previous session's highs, I think it could be a ripper. I don't expect that in Dow. I expect low volatility grind. And if it gets below this beacon level of 41,945, then I just think it's a total chop fest. It could go lower, maybe down to 40,830. I don't even think that I see that unless there's a news-driven event. I just think it's going to be choppy and sideways and grindy higher. If you're looking for a low volatility grind higher, the Dow is your market. Next, we're going to go to the Russell. Russell is just a head scratcher for me. If the Russell can't do good in a rate cutting environment and with all the indexes really relative basis much stronger than the Russells, I think it's the weakest the Russell has been in terms of the other indexes. And I don't know how many years, I think it's decades. If it can't do well in this environment where we just have this runaway bull market, then I don't know what to say about the small caps, because at the end of the day, right now on their chart, as far as I see sideways. And if they could start to sustain trade above the 8-day moving average, or even I'll probably go as low as a 5-day, I'll tighten it up as we start to go higher because I want to see if it has momentum. And I look at 22,470 or 470. Someday it might be 22,000. Who knows? Maybe not in my lifetime, but you never know. And ultimately, if it holds above there, then maybe you start to see a grinder higher. What's key about the Russell is the Russell reminds me a lot of the gold market at times, where it'll just do nothing and it'll pretend like it's breaking out and then it can't. And then eventually it breaks out and the thing is just a face ripper higher. If Russell starts to gain steam here and you start to see it go up, this could be this grab, hold, and go, higher market that you just don't want to fade. And it could come all at once. And I think that would be bullish across all the indexes. The flip side is it stays in here and it just churns and does nothing. I don't think it helps the overall case for the S&P or the Dow. I just think because you don't have full market participation into a time where we're heading into an election. And I just think overall, we're heading into a period of where we could be just in a consolidation for a period of time. The Russell, I think if it starts to get weaker, could weigh on the indexes. Maybe it doesn't pull them lower, but it just prevents any higher. But if the Russell gets below 21,064, 21,000, there I go again, 2164, then I think, look out, man. I mean, this thing can really start to break. And ultimately, I think it pulls down all the indexes. As long as it stays in this box, sideways chop, above this box, higher, grind, maybe a ripper if it starts to gain steam. But if it gets below here, not good. Next is the NASI. The NASDAQ has been the upside leader for so long. It's just done for now. I mean, you can feel the rotation out of tech. I don't need to listen to the big macro people talk about it. I don't need to hear from all the big hedgies out there talking about it. When I look at the NASDAQ right now, not the place to be. Now, here's the thing with the NASDAQ. Because it's just, I think, in this big consolidation, this big box that I have right here, the NASDAQ is one of those markets where even though it's not overwhelmingly one direction, I still like being long over being short. Why? Because it's the NASDAQ. I mean, it's just not much more to say about it. This market is above the 8, 21, and 34 moving averages. It's still relatively bullish. It's had an unbelievable run. That doesn't mean that by any stretch that it should stop. But it's just in a pause. It's in a period of where it's just going to probably go sideways. If it gets above 20,682 and it closes above it, and I see this Bollinger Band start to expand higher, then we're back in grind higher mode. And then I think this thing is just a buy in every dip you can. And until then, it's sideways. It's a two-way tape. I favor the long side over the short side. The only way I start to get bearish, the NASDAQ, is if it gets below right here. If I split that box in two and it gets below 19,000, let's call it 730, 720-ish, right? Down to 19,667. There's that little range. I'll even just take the box into there. Like if it gets below here, then it could get a little ugly. And then I start to see people into year end going, wow, NASDAQ's failing. This could start selling across the board in the S&P as well. So this little area right here in the NASI is of extreme importance. Until then, this is what you're looking at. And I think sideways, more likely higher than anything, especially if S&P keeps going up. Above here, I start to get more bullish. And that big picture target would be 22,205. And NASDAQ, I think it's definitely achievable if it starts to get daily closes above this box. But until then, that's what I see in the indexes. Coming out of Q3, going into October, historically a busy month. Everybody's back at their screens. Expect volatility. Favor buy side in S&P and Dow over the other indexes. Sideways to up in NASI. Russell head scratcher. Maybe it plays catch up. Maybe it doesn't. Maybe it plays Debbie Downer as well. If it starts to break, what does that bring to the market? So Q3 is over. Move on to Q4. Stay patient, everybody. Going to be a lot of activity. Just wait for your setups. It's all about position sizing. Trade well. Cheers.